Hey, welcome back to Tuesday Big Ass Red Sox. I'm Dylan.
And I'm Vinny. And today we're talking about Alibaba, the latest quarterly report. Another punch to the face of us beaten and battered Alibaba shareholders. Going to talk about what it actually means for the company and whether or not it's time to stick with Baba or, in my personal opinion, dump it and move on to something else. I don't know. We're going to talk about it and get into the numbers here.
Yikes. Tuesday Big Ass Red Sox.
So our main man, Charlie Munger here, stood flat with his most recently quarterly filing. He comes out like a week after the due date, and he rarely makes a trade, so that's why we haven't done videos on it recently. But the real question is like, is it time to like move on to something else? Like, has Alibaba shown that it's a value trap rather than like a value play? That's the real question.
Yeah,
All
I
right.
mean, I got 25K on this, so I'd like to.
Yeah, man, I hear you.
Got 300
So
shares.
market obviously didn't like the news when they reported earnings this week. Pretty big vertical red line here. Okay, we're going to talk about why. Um, so as far as the actual press release goes here, all right. So the major highlights: 9% year-over-year growth in revenue, and they did really well as far as growing their both their EBITDA and their earnings, 34 and 18%. Those are sexy double-digit growth numbers there, and a 9% growth on the top line is pretty good for a large-sized company like Alibaba is. The news that was kind of surprising, and I'm mixed emotions about it. That's why I gave it the yellow flag here. It was they're going to start paying a dividend, right? All the dividends investors can now get on this point. They're going to pay out $2.5 billion of their cash hoard as a dividend, which is it's interesting. It's not my favorite way to return capital to shareholders, but at least something that they're trying to do, or at least save face by doing it. I guess. So,
So
encouraged that we're still holding for a reason. What's that
2.5 billion for the year, right?
for the year? Yeah,
I would
exactly.
much rather them buy as many possible shares as possible.
No, agreed. That there's something there that doesn't quite make sense, and I'm not sure if it's CCP. That's my strong suspicion. We'll talk a little bit more about like their kind of valuation and that sort of thing here in a minute. Um, but income from operations strong, 34% increase year over year. That's a big number. All right, and then the adjusted EBITDA like increased 18% year over year. Those are like big, sexy numbers. 30% increase. I can't even begin to tell you how like hard that is to achieve.
Yeah.
For a company
So
of this size.
this is cool because this is a lesson for me because I did not get to read this. I was slammed with work. So as of right now, I want to buy more. So we're going to see how that changes based on the rest of this presentation.
Yeah, we had at least one user that our viewer that commented that he was like, hey, I bought more today. I just couldn't help it. And the metric that I really try to follow is free cash flow. I want to see how much cash, money, dinero is this business making. And look at this right here, 27% increase. Okay. 27% increase in the actual cash produced by the business.
Okay.
6.2 billion almost for the quarter. They even talked about in a conference call being $27 billion for the trailing 12 months in terms of free cash flow. It's a big number.
So if everyone's angry at the dividend was only
Mhm.
2.5 billion. That's 10% on the 12-month number that you just gave me. That's not that
Yeah.
much.
It's not that people are mad. It's inefficient, right? I want to talk about that a little bit more and we get to a few other slides here. So this is kind of like the major red flag. And this was a lot of the news that people really were unhappy about and why it sold off so aggressively was that they flat out said because of the U.S. export controls and the fact that they're not going to be able to get cutting edge chips anymore for their Ali Cloud, that it made the future uncertain for Ali Cloud, and that's why they've decided to not go forth with the individual IPO at this point. And I have some pretty mixed emotions on this. One, it just seems like a prudent business knowledge, right? Like, do you agree? Like, if you have no future certainty about getting your products, you really probably shouldn't be putting this out there, right?
Yeah, it
Yeah.
sucks.
Well, does it though? Like, did you notice like there is no you can't own Amazon Web Services individual shares, can you? Can you
No.
own like Azure individual shares from Microsoft? No. Like it makes sense to keep it in house because you get greater synergies out of the business, right? Other units on Alibaba, particularly like Taobao, Tmall, those sort of really intensive computing businesses can utilize Ali Cloud. So keep it in-house kind of makes more sense ultimately for the best product and the best ultimate return to shareholders. Okay, they were looking at ways to unlock value now rather than having the best long-term projection for the business. Right? You get what I'm saying?
Yeah, but I mean, they also split the company in like five different sections. I don't,
Yeah, yeah. So they did kind of touch on that a little bit. There's actually a slide coming up here where they're going to talk about some updates there. But part of that makes sense from an internal basis where they have it on these 6 different units is that they're going to
six.
theoretically act more nimbly, right? The better decision making, a little bit more delegated to the front line. And I get that. But keeping them all under the same umbrella does make more sense as far as
Right.
the actual value of the business longer term. Right?
Okay.
Now, this is like the update as far as the segments right here. The basically no Ali Cloud IPO at this point in time. They are, however, moving forward with external fundraising for the Alibaba International Group. All right. Kind of mixed emotions about that when they're sitting on a giant cash hoard, whether or not they should be taking in additional outside money and diluting our ownership of a rapidly growing business. I personally would rather them not do that and use their own funds to invest
Yeah,
internally if they can get a decent return on their invested capital. All
I'd
right?
rather not have a dividend and then
Yeah,
put that money towards this. That's common sense. Okay.
if they can do it well, and that's a real question. Like I guess I can talk about it here, but what do you think about Alibaba's ability to invest internally? Are they good at it or bad at it?
I'm
I'm
gonna
just
go
curious.
bad at it,
Yeah,
because for the amount of money they had, this is just in terms of share buybacks, the amount of money they had set aside for share buybacks and how low their price has been relative to what it's been in like 9 years. Just
yeah,
spend all of it. Like I, I know you, and I know there's gonna be a free cash flow yield at the end of this. Is there?
yeah. There
Okay,
is, of
I'm
course,
gonna
there is.
guess it's a juicy high teens number.
It's a
So
ridiculous number because that's been real criticism of Alibaba, and this is something that I'm legitimately worried about. I want to see if they could actually turn around on this. Is that their return on invested capital is in the single digits? Where I'd much rather see like a business like Apple can do like 15-20% return on invested capital. It's insane. Part of that is because they're buying back their own shares as their share prices are increasing, but Alibaba has failed to do that. They can't initiate this actually upward surge by buying back their own shares. They've been impotent to execute on that. And their return on invested capital really kind of shows that. They did talk about on the conference call that their goal is to get it back into the teens, which would be nice. I'm okay with them hanging on to their $62 billion positive net cash position if they can actually freaking invest the crap and get it back at a decent rate of return rather than paying out a dividend. I don't care. I don't want a damn dividend. All right. Um,
impotence is a strong word. You should know that,
I
Vinny.
do. I do. Ow. Love it. That's
Here
what you were going
comes.
for. Sound effect. I love it.
Yeah, I had to look
Um,
to my right to find it.
Yeah, so this is dividend, $2.5 billion. Yeah, sure. I mean, I'll take it, but like at this point, it's not the best thing. I'd love to see them return, actually invest internally and get back a decent rate of return, something better than I can do. Like a 15% rate of return would be fantastic if they can achieve that internally. That's their goal, is to get into the teens. They said, and they're going to be all their new projects to be evaluating like a 3-year time horizon. If they're not, looking positive on 3 years, and then like they're going to cut the project. Which is kind of funny because like for me, I've been owning Alibaba shares for more than 3 years, and it's not looking positive. So maybe I should just cut them by their own logic. Ding, ding, yeah, there you go.
Yeah. Okay.
As far as the share repurchase goes, $1.7 billion in share repurchase this quarter, and there's $6.2 billion in positive free cash flow this quarter.
Come
Pathetic,
on.
right? Like less than one third.
Yeah, I mean the amount they have allocated for it. I just, if you're confident in your company and you're thinking that like, wow, this share price is incredibly low, let's take advantage of this and spend all the share repurchase money we have set aside. The fact that they're
Yeah,
not doing that makes me think that they're like, we could go lower. Like,
I mean, sure. I strongly, strongly suspect that this is a CCP doing, that they're limiting their ability to buy back shares. There has to be an external force that's doing this. It doesn't make sense, I think, from a financially prudent, kind of investor first approach. It just doesn't to me. Um, with that being said, I wanted to highlight this because people will say like, oh, they're barely beating their stock-based compensation. They are chewing up shares a little bit here. Okay, this is headed the right direction. They are still, over the last like year and a half, still net negative as far as their ability to destroy shares by share repurchases. Okay, and that is a good thing, but we might rather see this graph be much steeper because the share prices are ridiculous right now, particularly when we look at the free cash flow yield here, which is coming up in a second.
Yeah, and that y-axis there was by point 0.1. So that decline was not a lot. That was between 2.5 and 2.6.
Yeah, yeah. I mean, hey, it's progress. I will give them that though. So this is another kind of interesting point here. Look at this. Well, broadly, look at all these numbers, right? There's a lot of units here growing, pretty staggering numbers, right? Ali Cloud is the 2%. Honestly, they haven't done well since this whole kind of transition away from ByteDance. They haven't had big, sexy numbers as far as the growth ever since that time period. They've been doing this 1%, 2%, 3% maybe category, which is pretty anemic for a cloud provider. Okay, so that I understand, especially now that they're going to be limited on chips. I wouldn't want them to be doing an IPO. What sort of valuation is going to get from them at this point? It'd be underutilizing what I think they're capable of. So I'm actually happy that they're not going forward with the IPO. The other thing that I wanted to highlight from this side, look at this, the Alibaba International Digital Commerce. All right, still relatively small compared to their main kind of Taobao Tmall line of business here.
Ooh,
But look at that growth rate, 47%, 53%. They are growing massively there. And this is the segment that they're going to talk about taking on external money. It's like, okay, why? Like, we do not have enough cash in their $62 billion checking account in order to be able to fund projects internally. I
maybe
don't love that either.
maybe they prefer to spend other people's money rather than their own. Or going to your
Sure.
CCP thing, that money's going to come from the CCP. And then there's going to be, that's a possibility.
Maybe. Yeah, it's an interesting question there, but yeah, maybe. And one other thing I wanted to highlight from the slide here, the share-based compensation expense, they are moving this in the right direction, right? They're decreasing the actual amount of share-based compensation this year compared to last year. So they're being a little bit more prudent with their shares, even though the price is down significantly, which is part of it. They always throw this slide in here. Kind of Meta does a similar one. But basically what they're showing you here is that all their units are doing well as far as a cost control basis, that they don't have any units that are growing, increasingly larger in terms of their percent of revenue. That's all they're highlighting here is that being good stewards of the revenue in terms of running more efficiently and leanly.
Mm-hmm.
All right. So this is what I was talking about, the $6.2 billion in free cash flow this most recent quarter. All right. This is their net cash position, which they also talked about in the conference call, $62.7 billion. That's all of their cash and short-term investments minus their debt. All right. There's still $62 billion positive when you divide, subtract that out. Yeah. That's a big number there. And they have to be able to
Imagine
deploy that.
if tomorrow they just put 30 of that towards buybacks. I mean,
Yeah.
that's an outrageous number, but it's
Well, yeah, it is, but they can definitely be doing better than they are.
Jesus
All right.
Christ.
Yeah. This is absolutely ridiculous. So it's $200 billion. That was actually, I did that based upon yesterday's closing market cap. Today's closing market cap is even a little bit lower because of course it is. But the net cash $62 billion, if you subtract that out and then take their 12-month trailing free cash flow, which is $27 billion, their net price to free cash flow would be 5 times or a 19% yield. So for the freaking life of me, if you're struggling with return on invested capital in the single digits, why in the hell is management not buying up more shares? That is going to be the best thing they can do by far.
Yeah, it makes me nervous because I kind of want to buy more shares, but I don't.
But they don't.
Yeah, I know. I don't like. Why not?
I know. I'm telling you, it has to be an external force. That's the only thing that makes sense to me.
This is the most attractive price after these numbers that Baba has ever been. We've been covering this for a while now. We have never hit 19.4%. That has never happened.
Nope. No, I agree. That's insane when you're talking about, kind of blue chip American companies being down in like the 3 to 5% category. Your Googles and Apples are down in that kind of price range.
Yeah,
I think even Meta is over 5% now. But that is insane. You're talking about on a price to free cash flow basis that these like major staple American companies are quadruple the valuation of Alibaba. Meaning they could support an $800 billion market cap at this point in time.
I get the China discount, right? Because there's more risk.
Yeah.
But cut it in half, still awesome. Like, well, not awesome, but pretty good.
Yeah. sexy for sure. These are just my kind of notes after I listened to the conference call. We've already kind of talked about most of this, but they are working on improving the return on invested capital, which they could probably easily do in my mind by buying more shares back at this ridiculous friggin' price. But like, I don't know. Internal investment, if they can get above market rate returns, is the far and away the best way for them to deploy capital. Okay, but they haven't been shown to be good stewards of it. Yeah, they have a new management team. They have a new CEO now. So maybe there's a possibility here that we finally get a little bit of a resurgence and better kind of utilization of their massive balance sheet here. Because I mean, imagine inheriting a company with $62 billion of positive net cash. You can certainly let your ideas run wild at that point. But I'm interested to see what will happen over the next year or so. I'm still going to give it a little bit more time, but I'm starting to really question the value trap nature of Alibaba shares. I will fully admit that. You got to be constantly reevaluating whether or not this is the best place to have your money. And I don't know. And then, like I said, I'm happy that they are holding off on the Alibaba, like Ali Cloud, IPO. I think it is probably the better move ultimately, anyways. And that's pretty much it as far as my major notes from this quarterly presentation.
So does the fact that Burry just spent not a lot, but like a decent amount on Baba and JD help at all? No.
No, no, he is too much of a trader. I don't trust his like long term valuation of things. He doesn't have the same time horizon I do. I'd much rather would buy a company that I think is at a fair price or has like some sort of a episode where it's acutely underpriced and hold on to it for 5 years or longer. I mean, 5 years is even throwing that out is short on my timeline. I'd rather own this company conceivably forever. But it's Burry's ownership changes nothing for me, to be honest.
Okay. I think one thing that would be interesting if we did it is I think that we should take a look at JD because JD had earnings prior. It went up a lot, actually boosting Baba up. Then Baba reported earnings, and JD is just all the way back down. Right? I would be interesting to see what JD's free cash flow yield is.
Yeah, yeah. I don't know. It's not one I track nearly as closely because obviously I have probably not 25,000 but $15,000 of my own money invested in Alibaba shares,
How,
something like
how
that
many
too.
shares you got?
Across like 3 accounts, I think it's 150-ish or something like that,
Okay.
or somewhere in that ballpark.
I'm at 300. All right, guys.
Oh boy. All right, guys. Yeah, catch you in the
Have
next
a
one.
good one.